Welcome everybody, and today we'll discuss some miscellaneous topics in PGBP. Yes, we are to the end of the chapter PGBP, and I believe that you got super confidence with all the sections in PGBP. Now, let us continue with this. This is section 68, 69. These two sections are covered, and basically, these two sections talk about something called as undisclosed items, right? Or something which are not there are shown in the books of accounts. So ultimately, the purpose of the assessee or the purpose of the person is to show either less income or more expenditure so that he can escape taxes. With that purpose, people do show more expenditure, do show less income, hide the investments. But someday or the other, they will definitely be caught. Income tax department will raid their premises. They'll find that so much cash is there, so many assets are there, right? So this way, they will be caught. So when they are caught, at that time, the amount becomes taxable. So what are that situations and when it is taxed? All that we are going to discuss in this section. Shall we start? Yes. You would have heard about cash credits. That means some amount is credited in the books. So in simple language, we can say that some amount is received, it is shown in their books of accounts. But when they filed the income tax returns, they did not show that amount. So, if they did not show the amount, then income tax department may ask a question. What happened? Why you did not show this amount? What is the reason? If you give satisfactory explanation, no problem at all. The chapter is closed there itself. But if you don't give explanation or your explanation is not satisfactory, you did not give explanation in that case, or you gave explanation which is not satisfactory in that case. In these two cases, they said that whatever the amount is becomes fully taxable income. Now, in which year you accumulated the money is irrelevant. The year in which the income tax department caught is important. So in that previous year, it becomes a taxable income. So now, section 68 talks about what? Cash credits. Cash credit means what? Amount credited to the books of accounts. And when asked for explanation, not given. Or sometimes you actually received a loan. But from where you received the loan, right? The person who gave the loan, do he has that income to give you the loan? That you should have the proper record of. If you don't have the record, you are not ready to give satisfactory explanation, then income tax department will say that this is your income. Now you may say, sir, this is loan, I have to repay, sir. Boss, you would have created a dummy person, right? Your black money, through him, you took it as loan. Maybe that has happened, correct? So that's what income tax will use. If it is not true, then showcase. You tell me that person had genuine income. Out of that genuine income, that person gave the loan. You show the source. If you are not able to show the source, then definitely income tax department will treat that loan as income. I missed one thing, correct? So section 68 also talks about, suppose a company is there, which is not having, public is not substantially interested in it. So it's basically a private company, right? A closely held company, right? In that company, public is not substantially interested. Public is not at all interested. Now, when public is not substantially interested, public substantially interested nahi hai. In that case, what to do? The answer is as simple as that. If it's a company, it got some share application money, it got some share premium money, it got some share capital money, right? All that monies it got, but it's a private company, so public is not substantially interested, right? In that case, you as a company not only have to maintain that you received the money, recording it as capital. No, it's not over. You have to also ask the applicant, right? Whoever is going to purchase the shares, give your Aadhaar card details, PAN card details. How did you earn that money to invest into our company, right? All that records the company is supposed to maintain. And if the company don't maintain the record, company don't have satisfactory evidence. Suppose we ask that particular person also, he also don't have proper explanation. Then assessing officer will treat that share application, share premium, share capital money also as your income. So amount credited to the books, amount credited as loan in the books, or amount may be credited as capital, application money, or something called as premium money. Proper explanation required, right? If explanation is not given or proper explanation is not given, which is satisfactory to the assessing officer, then definitely he'll treat it as income. And especially when it comes to share capital or loan concept, you not only have to disclose your portion, but you also have to convey that the person who gave the loan or person who invested as capital has that sufficient funds, the source to actually invest the money, give it as loan. That explanation or that reference, right, that documentation should be ready with the company. If not, the amount received as loan or capital or credit in books treated as income, right? Undisclosed income, right? Next, come to section 69. Now you have a business, but you invested in some properties, right? You purchased lot of real estate and all that. Now till today also, now recently central government started working on it, but property related matters are handled by state government. So central government don't have database of properties held by respective person. So that's why what happens, he will maintain so many properties, so many investments, but he did not showcase in the books of accounts. So if the income tax department catch hold of such investments, whether it is in real estate, whether it is in shares, whether it is in suppose in crypto concept format also, right? Or if it is in the form of some debentures or some options or any form, you keep the investments. And when asked for explanation, you are not in a position to answer. When asked for explanation, you are not in a position to answer. So are you able to understand? So in that case, what will happen? The income tax department will say, hey, are you ready to give explanation? No, sir. Okay, please give explanation. You gave something not satisfactory to assessing officer. Then it is treated as income. Right? Section 69 completed. Now come to section 69A. Unexplained money. Suppose suddenly a raid happens at the office, like you would have seen in West Bengal, one of the minister's relative or personal assistant's house was raided and hundreds of crores cash was found. From where this cash came? Or suppose some around 10 kgs of bricks of gold found. From where it come? Jewelry found. From where? Silver. From where? Right? So you should be able to explain. You should be able to answer. That's why one nice suggestion I'll give it to you before we proceed with the subject. If truly you purchased any jewelry, please maintain the bills of it. So that if any untoward incident happens and income tax department raid your premises, you should have that evidence to show, yes, we purchased this from this jeweler, from this place. This is the document. So you will not face problems. So that's why maintain the record. In personal life, this is very important. Now let me continue with the subject. So unexplained money, section 69A. It talks about not only money but also jewelry, also precious metals. So if you don't give satisfactory explanation, or if you don't give explanation at all, then in that case, assessing officer may treat the entire thing as your income. Now come to section 69B. Simple. Amount disclosed in the books of accounts is suppose 100 rupees. And in reality, you have 180 rupees. So from where you got that extra 80? So that means you did not show complete information. You have something in excess of what you disclosed. Maybe excess cash, maybe excess investments, maybe excess jewelry, maybe excess silver, maybe excess precious metal, maybe excess some property, anything is okay. In that case, they will call you for explanation. If you don't attend the explanation, you don't give the explanation, then whatever the income tax department got, they will consider it as income. Whatever excess than you disclosed will be treated as income. Right? If you attend and give explanation to assessing officer, but he is not satisfied. So for whatever portion the assessing officer is not satisfied, that will be treated as income. So till now, we covered section 69B. Now come to 69C. Here, you have written lot of expenditures in your books of accounts. That means, till now, when we spoke about section 68, 69, 69A, 69B, what happened here? In these cases, you did not disclose it. You did not show it in your books of accounts. Right? Or you did not show it in your income tax returns if it is required by the income tax department, or as per the rules of income tax. So you did not disclose it. That's why you will be caught, you will be asked for, and if you don't give explanation, it's treated as income. But here it is exactly reverse. Section 69C. What happened? In your books of account, you shown lot of expenditures. When they asked to whom you paid this expenditure, there is no answer. Right? Who is the receiver? No data. So you don't know who is. If I am making payment, I'll make payment to my employee. Right? I'll make payment to a Uber driver. I'll make payment to a college if I am doing course. So that means if I am making the payment, if it is an expenditure for me, somebody would have received it, na? And if income tax department asks for you, please give the data of the person who received that money, right? To whom you paid. In accounts, you wrote all the expenditures, but you are not ready to answer. So if you are not ready to answer, then it's your personal problem. Correct? Then whatever expenditure you are not able to answer, or your answer is not satisfactory to the assessing officer, will be treated as income. But sir, if that expenditure is treated as income, I can also claim it as expenditure also, correct? The answer is no. You cannot treat it as expenditure because you did not spend. If you would have spent rightfully, right, then you would have given explanation. You would have shown the person to whom you paid. Correct? So here you cannot say that okay, it is treated as income now, so related expenditure I will deduct. No, related expenditure not allowed as deduction. Okay, this way you should understand section 69C. Now what we discussed till now? We discussed about cash credits under section 68. Here in credit in the books of accounts, loan in the books of accounts, or share capital in the books of accounts. Either you are not able to tell from where it came, right? Or in case of share capital and in case of loan, you are not able to tell not only from where it came, but also the source from which that person got that money. Then it was treated as income under section 68. 69 talks about investments. You did, but you did not show to the income tax department. Then section 69 says treated as income. And when asked for explanation, you are not able to answer. Right? Next thing. Section 69A we discussed. We discussed about unexplained money. Right? We discussed about unexplained money, jewelry, silver, precious metals, all that. Either you did not give explanation to income tax department, nor your explanation given was satisfactory. Right? So in that case, 69A applied. Now 69B, you showed something, but you did not show completely. So whatever excess is the amount which you did not show, that portion, whatever excess amount you did not show, that portion is taxable. Okay, treated as income. Then we discuss section 69C about expenditure shown in the books of accounts where you are not able to give explanation. That's treated as income and related expenditure also not allowed. Then 69D we have to discuss. Because ultimately in today's world we are using account pay check, demand draft. But go back to the olden times, most of the businessmen were to trade in a customary hundis, customary documents. Documents may have different shapes, different writing styles, may change based on customs. But you took some loan in the name of hundis, or you gave some loan in the name of hundis, but you are not able to explain, or your explanation is not satisfactory to the assessing officer. He feels that you are just trying to avoid the income. For that, you actually created some type of setup so that your money only you are taking it as loan. Right? So, in that case, what happens is, whatever hundi transactions are there, if you are able to justify, no problem. Otherwise, it will become taxable income. You should be able to justify. So, what is the lesson learned out of this? Whatever we do, documentation is must. Preserving the documents is also must. So, section 69D. So, if you are transacting in hundi, whether it is given, loan taken, loan given, or any transaction, you should have proper explanation. Give it to assessing officer. He is satisfied, no problem. He is not satisfied, then he will treat it as income. Obviously, if you don't like, you can file a complaint to Commissioner Appeals. If he also don't listen to you, you can go to Income Tax Appellate Tribunal. If he is also not listening, then you can go to High Court, Supreme Court. If it is a matter of law, then only High Court, Supreme Court. If it is a matter of fact, then Income Tax Appellate Tribunal is last authority. So you have the chance. It's not that Income Tax Department having the power of law will do gundaism with you. Right? Only fair amount which you should have shown it as income, you did not show. If they feel, they will treat it as income and collect tax from you. But if this type of unexplained items are there, undisclosed assets are there, what is the rate of tax? That rate is given under section 115 BBE. Under which section? 115 BBE. What is the rate of tax? 60% is the rate of tax. Right? Then 25% surcharge. Then 4% health and education cess. So all three together how much? Sir, 60 plus 25, 85 will be there, plus 4, 89. So 89% of the amount will be taxed. Is it right? The answer is absolutely no. Why? Because surcharge is a tax on tax. So it's not tax on income. Cess is a tax on tax plus surcharge. You remember the basics I taught in the first chapter. Same basics are useful here. Okay. Chal, 60% is the tax. So 60% into 25%, 15% will be there. So 60 plus 15, 75. On 75, when you apply 4%, you will get 3%. So 75 plus 3, 78% is the tax payable. This way you should be able to answer the things. Now let me discuss with you again with an example. Suppose example, income tax department found that you have an amount of 1 lakh rupees for which you are not ready to give explanation. So they treated it as income. Now because it is unexplained money, it is taxed under section 69A. Right? The previous year in which it is caught. Okay. Now, how much is the tax? Let's calculate normally. 1 lakh into 60%, 60,000 is the tax. On 60,000, 25% surcharge. So 60,000 into 25%, 75,000 will come. Correct? Plus 4% health and education cess. 75,000 into 4% will be 75,000 into 4% will be 3,000. Correct? So 75,000 plus 3,000, 78,000 will be taxable income. Now, why I am teaching this to you? In the MCQs it was asked in the exam. That's why. Okay. So you should be aware. Every minor thing, if it is minor, it is asked in minor way, then I'll teach like that. Right? Whatever is taught in which way, whatever is needed from your exam perspective in which way, or from your practical perspective in some way, I'll teach all that in that way possible. Don't worry. Okay. Now, we discussed section 68, 69, 69A, B, C, D. Right? And 115 BB. Last section for today, we'll discuss about computation of income of construction contracts or service contracts. Right? We are talking about income, right, of construction contractors, income of service contract. Which section? 43Cb. Now, construction contracts is very simple. You have to remember that percentage completion method should be followed. What is followed? Percentage completion method as per ICDS. Now, for your exams, ICDS is not there. So, how will you understand what is percentage completion method? In your costing, contract costing chapter you study, na? There you do percentage completion method. Same is applicable here. Okay. So, determine the income of the construction contractor. Which method is applicable? Percentage of completion method. While determining the income, they will not just record cash received is enough. No. Whether it is cash received or retention money, both should be considered. Right? Because if you have to decide the contract price is nothing but cash received plus retention money. Right? So that's why whenever you actually apply the percentage completion method, cash received plus retention money based on the stage of completion of the contract. Right? You will not pay entire money at the start of the contract itself. Correct? You will pay in stages. You will complete the contract in stages. So for that purpose, percentage completion method is required. Right? We follow in real life for making the payment to contractor also. And in same practice in income tax also, to compute the income. Now what about one more thing, like construction contracts, income wise we understood. But when we talk about expenditure, we'll write all the expenditures. Many people feel that if you received any interest income or dividend income or interest income, dividend income, capital gain income during the course of this construction, now it should be reduced from the cost of construction. This is what we think, right? In accounting it may be right, but in income tax it is not right. So interest, dividend and capital gain income earned by the contractor because of the construction contract, please remember it is not deducted from the cost. Okay? Because interest income is taxed under other sources, dividend income under other sources, capital gains under capital gain chapter. So these incomes are taxed under that respective heads. That's why while you compute your business income, you cannot deduct that from the cost. Please remember, it's not reduced from the cost. Which incomes? Interest, dividend and capital gain income cannot be deducted from the cost for computing your business income. Okay. Now, okay. Please remember, not only reduced from the cost, and also it will not be shown as income also. Right? Because it is interest income, because it is dividend income, capital gain income, don't show it as income under PGBP because they have separate heads to show. Now, let us understand the last part, service contracts. Service contracts has two parts. If the service contract is for 90 days only, if suppose service contract is for 90 days, then project completion method. Treat that income as income when the project is complete. And a short period contract, right? So let the project be completed, then treat it as income. But if suppose the contract is more than 90 days, service contract is more than 90 days, then what will happen? Then follow straight line method. Follow which method? Straight line method. So whatever income is there, divide it over the period for which you are going to give the service. So service period, we have to consider the income, we have to consider income divided by service period. Then you will get the periodical income, whether it is monthly or whether it is for the previous year. Okay. So straight line method we should follow. With this, we completed section 43CB and section 68 to 69D, 115 BBE. All that is done. And after this, we have 40B. In that, there is amendment actually. So that you have to be very careful. Listen to that also. Okay. Bye everybody.